So, hi everyone, my name is Jason. I'm the co-founder and core contributor at Solayer, mostly doing protocol engineering work. So here's a little bit more about myself. Before this, I co-founded MPC Vault, which is a multi-chain, multi-sig wallet for teams. We're doing about $8 to $10 billion worth of transactions on chain every week right now. Before that, I mostly worked on GPU-based acceleration for language model training, BERT and LLMs. Mostly different kind of scheduling and how do you optimize the lower latency stuff to make sure training goes faster. That's very beneficial because the chain we're building, which is super fast, derived a lot of ideas based off our prior work, me and my team members. The team members are from Sushi, AWS, Microsoft, and other, pretty much the Bay Area companies. We got talent from each and every one of them. Also want to announce a recent acquisition for it's a great company in the space. They're mostly in the security space, Fastland. So lots of talented folks in, MEV research and also EVM design, semantics design joined us because of the acquisition. Fastland stopped and also returned about $40 million worth of capital on chain last year. We also just hacked a protocol 2 days ago. It's not yet announced, but we'll share it later. It's a pretty major Solana protocol. We returned all the funds 2 days ago. And also you might know my colleague Chao Fan, who's also in the audience today. He's quite famous for leading the investigation for the Libra scam, and he aped into some part of it. But that's sort of who we are and about the team. Because there's a traded token layer on Upbit, Binance, all the other popular trading channels, DeFi included. So I do have to put out a statement. Nothing I'm saying here shall be construed as investment advice. You shall not buy, sell, even give away your tokens because of what I said. Everything here is only a future outlook for, from a technical roadmap perspective. So I want to share a bit where we got started. It was actually in restaking. But we reimagined restaking a little bit. We didn't take the shared security approach as did EigenLayer because it's very hard, in our view, to have a healthy market dynamics where the borrowers of the security is actually paying. You have demand for that for sure, but it's like how much people actually pay and how do you price security to have the donating or the protocol receiving the security deposit or the security stake paying back to the protocol in tokens. That's actually a lot of ask. And you don't really see that happen in crypto, at least for now. So we don't really know when that's going to take place. We're very bullish on shared security, of course, but that's not our approach. So our approach instead was more organic. We're trying to generate more yield for token holders, like especially for LST token holders. So we have this shared liquidity LST protocol where we generate much higher yield because of validator optimization. And you can also transform the SO into different formats. For example, like BGSO is, something that BitGet exchange is using. The highest is about 19% during the Trump trade. And then you can also have other types of SOs, such as like Sonic, I think we spoke previously, is also supported by Solayer. And whenever you transact between any of these assets, they actually share the same liquidity pool. So that's the how we're designing it. So first of all, a lot of liquidity and then a lot of yield because of the hardware optimization that we're doing. Announcing the next phase for Solayer, it's really about the hardware accelerated network. We call it infinitely scaled. We're targeting 1 million TPS per second. And just to put that into perspective, that's 100x of Monet. Solana at the highest on mainnet is doing about 7,000 per transaction. Ethereum is only 62. So just a frame of reference. Not only this, Solayer's Infinity SVM is also going to be a real-time blockchain. What that means is that whenever you send a transaction to the blockchain, you have to poll the blockchain for state updates. So I'm trying to buy something, and then my wallet is actually querying the blockchain every second or every other second to see if my transaction has been completed and marked as successful by the blockchain. Whereas for Solayer Infinity SVM, we're trying to reduce the latency to the extent that you can actually get the result back in the same call. So when you make a transaction, you click submit, you'll get the response, right? Otherwise, if we know we can't really include you, you'll fail. And then the wallet can retry. So that's the latency guarantee that we're trying to build into the protocol. And the end goal for this is to really create a user experience for app builders that is as smooth as Web 2. And we know from the Solana versus EVM, dynamics played out in the last couple of months that what user really wants is an end product that's as fluid as Web 2. And therefore, you see, even though EVM has a lot of incumbent liquidity, both retail and institutional, and there are launch pads for meme tokens on EVM as well, you still see the flow of funds from EVM to SVM. So that's, I think, a very interesting observation from our end. We do think that SVM semantics-wise, in terms of SVM semantics, it's much better. You don't need swap. Like whenever you want to do a swap, you don't have to do the approve and then swap. If you're trying to do a bridge, you actually have to do approve and then bridge. And then on the destination chain, you have to do approve and then do the target action. Whereas on SVM, just one action. And the SVM instruction, the transaction itself also allows for better composability, which means that you're able to put in a lot more actions and have the user sign once, and then they accomplish much more things, as opposed to repeatedly ask for users for signing and then sort of destroying the user experience. Now, going back to how we're building this, so we had the idea when we were optimizing the Solana validator, if we were to take away certain things and restructure certain things, we're able to achieve a much higher throughput. And then one thing that came to, that's the most obvious is the math of the network bandwidth. When you have 1 million transactions per second, your network effectively will be running at 10 gigabits just to receive the transactions, right? Not even broadcasting, right? Just receiving the transactions, 10 gigabits. And then if you have 10 peers, that's 100 gigabits per second. Well, what that means is that you have to have a different topology, and you have to go with hardware accelerated approach by using specialized equipment to do that, right? So the telecom, bigger telecom companies, they employ the equipment already. When it comes to network topology, we're actually having a mega leader that does all the sequencing and validation, and we have a decentralized group of verifiers that attest to the chain state. And the decentralized group of verifiers don't really have to build the blocks, but they have to attest to the chain state in real time. Because it's a mega validator, there's always, almost no rollback, it's no rollback. So you get instant confirmation. So and also anti-MEV, unless we are acting as malicious, builder, and then you're able to prove that we're acting in a malicious way, right? So you get all the nice properties and lower latencies, no sandwiching and etc. At a super low cost. So consensus-wise, one observation we've made is that if you just apply the transaction state, if you don't validate it, like calculate everything yourself, which involves I/O and all the other things, right? If you just calculate it, if you just apply the state, it's super fast. But if you were to validate everything from scratch, it can be very slow. So we accelerate that portion of it via our mega leader, and everyone else, they just have to do one thing, apply to a certain, extent, and then they start validating only a part of blockchain, right? So like verifiers only validate part of the blockchain, but together they validate all the chain state. So like kind of divide and conquer type of approach. And there are some other optimizations we are doing. I spoke about the execution point of it. There's also a couple other stages that we're actually parallelizing quite extensively, like signature verification, transaction deduplication. So we actually have a pre-execution stage. If you read the white paper, there's more details in it. But what this does is that just to clean up all the garbage from the network receiving network port. And it also does the pre-execution. So when it comes to the real execution stage, you're able to execute it much faster by applying the state. Solayer's Infinity SVM is also not a single binary running on a single node, because that's what most blockchains are structured with. We actually have a cluster of nodes or mega leader connected by InfiniBand, which is what you see in AI training. So this is also another difference when it comes to cluster design. Now, last but not least, the most important thing is how do you have adoption, and where is the demand, right? The demand actually comes from, on Solana, you see congestion in the form of dropped transactions, transaction not getting confirmed, transaction not getting included, even sandwiching. So those are things that we see that we think is the product, is the problems that we're trying to identify and trying to address. And of course, how do you make this easy, right? So here are a few differences for Solayer's Infinity SVM against this traditional, other state, L2s, however you call it, approach. First is that users no longer have to go through a bridge website. Like all you need to do as a developer, if you're building on Solana already, is to import an SDK, and with the SDK will take care of everything for your users. And you don't have to change any other things. That's it. It's that easy. Like your users don't have to go to another website to do the bridge and then come back to your your whatever application you are building just on the same page and your page, right? The second thing is that we don't really require wallet support because EVM transactions have transaction IDs as part of the payload, whereas SVM does not have that. So therefore, even if Phantom, let's say, does not support us on day one, you're still able to have your users use Phantom, sign Solana transactions, but the actual thing is offloaded to Solayer and Infinity SVM. All your user sees is that after the first transaction, which is happening on Solana, that can be a little bit slower, everything else is instant confirmation. Like when you click a button, you get the results. And that's the experience. Yeah, so that's it. Running out of time here, but it's great to meet everyone. Thank you, everyone, for coming. I know I'm the last person standing between you and dinner and or freedom of the night. So thank you again for listening, and I'll be around if you have any questions. Thank you.